We are on.
My name is Abina Johnson, and this is Focus on Liberia. Hit it! From Kemau to Cape Palmer, mountain back to Atlantic Ocean, Obomi Hills to Pokondre, to educate, elevate, and promote. Talk about home affairs, hey, in diaspora, current affairs, hey, reliable information, history, talking about culture, hey, politics, education, entertainment, business, sports, advertisement, articulation. Focus on Liberia. Focus on Liberia. Focus on Liberia. From Monday to Sunday.
Ladies and gentlemen, welcome to another session of Focus on Liberia on the Marketplace. I am your host, Gabriel Carter. Today I have in the studio with me Percy Harris. Today we're going to be talking about the liquidity issues with banks in Liberia. I know I think we may have covered, we have covered this discussion probably several times when we were, I think probably 2018, we were looking at LBDI when they were publishing their financial reports, and we were telling people that, if you look at these things, these banks are not really sound financially, but the average person, they're not looking at that. So today, again, we're going off of an article that was published in, I think, the New Dawn, Liberia, where it cited SIB Bank in Liberia as having a liquidity problem, and whether the Central Bank of Liberia should intervene in terms of intervention, meaning that they should take it over and maybe sell it to a more qualified investor. So this is what we're going to be talking about today, but we're going to be looking at the overall financial market in Liberia. Why do we constantly, have liquidity problem with banks in Liberia? And now SIB is not the first case. As I said, there was several others, some of them behind the scene I can't talk about, was sold behind the scene. So I can't talk about that. So every time you see a new bank, that means there was another bank that was having problem that was, sold, that was taken over. So, but those things not what we're going to be talking about. I'm not going to be talking about the behind the scenes stuff. I'm going to talk about what was published in the paper today, which was the SIB issue. But there's no other best guest to have on here today to talk about this than Percy Harris. He works in the financial sector as much as the same as me as well, and so he has a depth of knowledge in that area. And so we're going to be talking about that in terms of looking at different area in the banking sector that we want to take a look at. So Percy, I know I keep yapping on too much. Welcome again, my man, and thank you for being on the show.
Thanks, Gabby. It's good to be here. It's been a while. My kids were asking me, "Daddy, are you going on the show today?" I'm like, "No, the show is taking a break, so I'm taking a break too."
Yeah.
So, but it's good to be back to discuss these issues as it pertains to the country. Hopefully, we can give some insight to the broader public less technical jargons. My intention here today is for people
Yeah,
to
exactly.
understand the fundamental things that is happening around them as far as the banking system might be concerned. Um, I'm going to try to use less jargon. If we did, probably I'll try to break it down so the
Mhm.
layman can understand, because it's important understanding these complex issues. Sometimes it's very important.
Right. And again, as I said, we work in the financial sector. We tend to like just talk like with jargons as if everybody else understands it. So let's keep that in the forefront as we go along and go through this. So first, I want to give the audience the ability to go through what we're going to talk about today. So first we want to talk about we want to look at how banks are assessed, meaning how do other regulators or people in the financial sector look at banks, in terms of whether they are strong or weak, or whether they are able to meet the credit demand for the sector, for the business environment that the service. There are several things that you look at. First, I want to go. One is the strength of the balance sheet. We will talk about that. You look at the liquidity, meaning how much money they have on hand to meet the loans that they're giving out. And you talk about the asset quality, the asset meaning the asset on the books of the banks. How strong is it? So we also look at the liquidity management. How well are they managing the liquidity? Meaning whatever deposit they're taking in, how do they service that money? How do they deploy that money to bring in more money as well? Uh, and one of the key measurement to that is loan to deposit. Uh, what we call ratio is probably one of the most important ratio you can look at. Um, and so that's that. But before that, let's set the tune here to look at the policy changes that happen at the CBL and how that trickle down, and how that could lead to what is happening right now, right? So in 2022, when the global economy was having its, uh, what I call inflationary or stagflation, uh, which was still in, by the way, well, hopefully phasing out of that by the end of this year. The Central Bank of Liberia made some policy changes, meaning they raised the reserve requirement. The reserve requirement is a global uh, bank's requirement that was set by the Basel. I think we're operating on Basel 3 right now. That meaning for every dollar somebody deposit, there's a percentage that needs to be kept, and there's a percentage that needs to be used for to give out loans, right? So in that case, in Liberia, if the money was deposited in Liberian dollar, 20% in 2022 needs to be kept, right? And 75% need to be given out as loan. Well, in 2023, that was revised. They upped it to 25% needs to be kept, reserved again, and 75% needs to be given out. So 2023 was 20 to 80. 2023 is 25 to 75, right? So again, depending on what money it is, if it's in Liberian dollar, that's the ratio. If it's in US, it's even more liberal, meaning it's only 10% you need to keep on the books. So without me talking too much, I will hand it over to you. I'll ask you a question in terms of what do you think, from what we're looking at right now, from what you've read about the case, what do you think may have, I mean, it could be a plethora of problems that led to it, but what do you think is contributing to the SIB bank liquidity problem?
I think what I think is, I think this is just symptomatic of a broader financial system as a whole, right?
Hmm.
My understanding is SIB was taken over. It's a new bank, like you said.
Hmm.
Previous bank failed, and the bank take it over, and then some sort of behind the scenes arrangement is made, and a new bank come and take it over. know the procedures and whatnot. So
Yeah.
it's a broader problem, right? Is a broader problem. It's a broader problem of this. It's a systemic problem. The reason that bank goes into bankruptcy is because they become illiquid, right?
Hmm.
Meaning
Hmm.
that when you become illiquid, when there's a liquidity problem, that means you don't have money to cover your expenses. In terms of a bank, their expenses mostly comes to overhead like employees, but mostly you don't have money to cover your depositors, right? People who
Yeah.
come in to get
Exactly.
their money, you can't
Yeah.
they can't get their money out. So in to the extent that you don't have securities, marketable securities that you can sell on short notice
Hmm.
to recapitalize your your balance sheet, and you'll
Yeah.
not be able to pay. You won't be able to pay your depositors. And so when a bank
Depositors.
become
Right.
illiquid, that one or two things can happen. You can either sell assets
Yeah.
or you can file for bankruptcy. I don't know if we
Right.
have a bankruptcy law in Liberia, or because if there's a bankruptcy law, then there should be a bankruptcy code because there will be creditors. I don't know if we have that whole slew of things that are going on there. But
Right. Right.
lo and behold, they said the precursor of this SIB bank filed for bankruptcy,
Hmm.
and the central bank took it over, brought in a new um, ownership and whatnot called SIB, and SIB took over the bank with legacy debt. Right, they had debt that the previous bank had debt that was already on their books, that was
Right.
inherited by this new
Hmm.
ownership, and the new ownership inherited those legacy debt, and so they have paid up to a certain amount. They are
Hmm.
claiming that it wasn't their fault, and I think part of the arrangement was that the central bank was going to absorb part of that debt also. I don't know
Hmm.
why and what the arrangement was, why the government would be taking on private
There's
debt.
taking on private
I
debt.
have
Right.
no idea, but that's the complicated part. Somebody have to come in to explain from the central bank and whatnot. But from my
Hmm.
course, just looking at it as a whole, I think it's a
Hmm.
broader problem. I think it has to do broadly with the system and its design as it is, the way it functions right now. I
Yeah.
think it needs to be looked at. And so yeah, and this is just like, again, I see it's symptomatic of a broader problem because
Right.
SIB might just be the poster child now, but the other
It
banks
could
in the
be.
country might also be infected by this problem, right? Because
Yeah.
I know I have when you have relatives in Liberia, you go to bank, you go to get a certain amount of money. The bank tell you they don't have all that money. They can only give you basically the rationing, right? It's some
Hmm.
sort of rationing that goes on. So if I want $500, I go there for $500. They tell me, oh, we can't give you 500. We can only give you 250 today. You have to come
Hmm.
back for the rest of your money. Why? I don't know. So some sort of rationing is going on. The fact that that is happening, it tells you that the system in and of itself has a problem, that banks are
Hmm.
not paying out depositors, especially in a fractional reserve system, right? So you're supposed to keep part of your deposit on hand to make payment, and then do the pay put part of it at the central bank, right?
Yeah.
Just in case you have problem like the like SIB had, you go back there, the bank will give you, and, so you have to keep that for security of the system and securitization of the system. But yeah, but by and large, I think the causation of that is a broader systemic problem. You have to look at the system in as a whole and not just SIB as a bank having this
Right.
problem.
Yeah. And I think I agree with you. And you brought up something. As I said, I didn't want to talk. So the backstory when the bank that SIB took over for when it went on the market, I heard about it. I was, there was some figures being thrown around in terms of what they wanted people to pay for it, and
Mm-hmm.
I just by looking at the banking sector in Liberia, knowing that there was a bank worth 44 million that left because there was a Ghanaian bank that left. I think back at probably 2 3 years ago, because they felt like the market was too small. It was 44 million. So and somebody was they had a figure that
They
they
were
thrown.
selling. They were selling the bank for the previous bank for 44 million in bankruptcy.
No, 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 no. The bank that left
Oh,
Ghana was about 44 million, right? So when this
okay.
bank that SIB took over for was being thrown around for sale and they called a figure which I'm not going to disclose, I looked at it, I said,
Why
they are
not? I mean,
being
it's public now. Why not? We already know
um
now. It's in the
I think
papers.
they were looking for 25 million, right? And for me, knowing the bank information that I knew on the bank, I said, this bank, from a valuation standpoint, does not even is not even worth 7 million or 5 million, right? But yet they are throwing it. But the way they did the valuation, because when you're doing valuation, you have to consider
Mm-hmm.
the debt of the bank as
Mm-hmm.
well. So
Mm-hmm.
they put all of that in there and they throw that figure out. And then for you, anybody who doesn't know how to do valuation in terms of what you can, you know, pay for a bank, you will think that is a great deal for a market, and there are contributing factor that will make you think it's that. But I think if you look at the market that they were in, I didn't think it was worth the price. So you know even though I didn't have enough money to buy it outright, but I'll say, hey, I was trying to be part of the ownership. I just bought it out. I bought as it, and it went on, and I guess it became SIB Bank, and lo and behold, a year or so a year or so later, we're here. And one of the things you said is that I don't know why the government of Liberia or the central bank will want to take part in terms of owning private debt, unless they create some kind of incentives, to say if you meet this target in terms of creating jobs, banking jobs in the country, we will give you the tax break or such and such and give you this break. But besides that, I don't think that's a business they should be getting into unless
No, not at all. The government
they're
shouldn't be getting in that.
literally, yeah, exactly. So um, I didn't understand the reason why they did that too as well.
It's still beyond me that the bank with that the central bank with. I mean, the central bank's primary purpose is to sell the lender of last resort, right?
Hmm.
If
Hmm.
they figure the precursor of this bank, the predecessor of this bank was illiquid and whatnot, what you do is you give a breach loan or a some sort of loan of last resort to the bank,
Hmm.
and you can take a look at the asset that the bank has and see how much value it has, and see to keep it afloat, right? That's what we do here typically, right? You go to the,
Yep.
if you can get financing in the interbank lending market, you go to the central bank window, like the federal
Hmm.
fund window, not the federal fund, but the discount window. You go to the
Discount
discount
window.
window and
Yep.
get a last resort loan, right? To see if you can cover your spread for the day or two or month or so. I don't know
Hmm.
what happened behind the scene that caused that bank to go into bankruptcy. Hopefully, so again, somebody will come and explain that someday. But yeah, but again, it's a broader systemic problem. If you looking at it, it's not just SIB. SIB is just a poster child right now, but it's a
Hmm.
systemic problem. Why the central bank cannot give loans of last resort to banks that are in trouble, right?
Yeah,
That's
and
another
I
thing.
agree with you. I agree with you on that perspective as well. Again, and because, like you said, we've seen that here during the financial market crash, where some of these banks like the BOA and all of these some of these big banks could not didn't have enough capital, right? Like you said, they went to the central bank when discount window, and where the government literally took shares by giving them that liquidity. They took shares in those banks, and then as they became profitable, they end up paying back those debt and exited. um, which I hope maybe that's what they did. But then again, the other question you will pose is that, do we have that much liquidity at the central bank capital for us to be doing engaging in stuff like that? And if
But
so,
that shouldn't even be happening, right?
right?
That shouldn't be even happening. The central bank should be testing these. It should be doing stress tests on these banks to make sure
Hmm.
that they can withstand economic and financial stresses when it come about on them, right? They
Hmm.
should be doing. I don't know. I mean, again, me and you just here. We're not inclined to the workings of what how the central bank regulate banks in Liberia, but
Hmm.
I mean, just as a professional in the industry, right?
Yep.
You should be testing. You should be doing stress tests on a regular basis to make sure that the system, the banks are sound, and so
Yep.
by extension, the system itself will be secure and sound, right? I don't know, to catch it last minute to time bank going bankruptcy filing on your watch. I mean, that could trigger a whole lot of domino effect. People already not getting all the money from their bank, and then they see another bank failing. I mean, it's of course a bank run, right? People could be
Hmm.
running to the bank and trying to deposit huge sums of
Trying
money.
to
In
get
that
their
case,
money
it
out.
could collapse
Right.
the system, right?
Yep.
I don't know, like the central bank have to be cognizant of these things and the economic impact that is eventually going to have on the system.
Yeah. And I'm glad you mentioned that too. But And I always like to tell the story. There's a guy who works in a, I don't know if he's a regular, he's not a regulator, but he just has he does some consultancy with these banks in Liberia. So every time you bring up the strength of banks in Liberia, he kind of take this, grandstanding approach, like, oh no, banks are sound and safe in Liberia. You can't say that, this and that. And I was like, to the point he and I went through a very extensive argument, and I said, what measures are you using to make the statement? Could it be because could it be because you're lenient towards them because you're consulting with them? He said, no, I think they're sound, they're very sound. So for me, when I'm saying something, I like to bring up evidence. So I pull up some balance sheets, recent balance sheet of some of the banks in Liberia, and gave it to him. I just sent it to him. I said, tell me from looking at this balance sheet whether it supports the argument that you're making that these banks are sound. He could not even read the simple balance sheet that I sent him. I was like, from this balance sheet, look at it. They just run it over and tell me what are these banks are sound. And this is not just 1 year or 2 years. This is several years that I'm giving it to you. So if you see a trend of this level of what even retained earning that are interest earning that are being depleted, and these ratio that are used to measure banks assess quality uh, have been on the downward trend, but yeah, you have the audacity to stand here and say, they're strong without any evidence to support it. But yeah, I just gave it a balance sheet. So he and I had that argument. So what I want us to do, let's go into some of the things. Let's look at what some of the things that are happening with the banking in general, not just the SIB bank, but in general, how those banks are doing in general to really give us ourselves and the audience um, a sense of what is happening in the banking sector in Liberia. Because when you talk about some of these things, you get some of these argument back, pushback from some people as well. And as I said earlier, I think we went over these things. We talked about the reserve ratio, so we're not going to stand too
So,
much on that.
no,
Uh,
you bring it back, bring that slide back because it's very
right,
important, right? This is
right,
important. This is one of I don't know how much how much instrument or tools the central bank has in the repertoire to regulate the financial market, right? But
right,
the
right,
reserve requirement is one, right?
right, right,
At the end of the Weah administration,
right.
Liberia was supposedly in a recession, right?
Correct. Yeah.
If, if you're in a recession, the 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 the, the sound policy thing to do is to be reducing interest rates so that credit can flow into the market, the banks
Right.
can continue to lend to people and whatnot, right? That would be
Hmm.
in interest rate term.
Hmm.
In terms of what we have here, in terms of reserve requirement, the
Hmm.
central bank supposed to be reducing reserve requirements so that banks can have more money to lend out to people in a
Absolutely.
recession. The fact
Absolutely.
that they were
It's
increasing rates in
tightened.
a recession
Yeah.
is
Yeah.
it's kind of
Kind of
like it's kind
intuitive,
of
right?
I don't know what was the economic underpinning for this, right?
Right.
Like
Right.
because now you in a recession, banks are forced to put more money away, and they will have less on hand to make loans or
Hmm.
cover deposit, whatever the case might be. So basically, the central bank in a recession they were actually tightening the monetary policy in a
When they should
recession.
have
It's
been.
counterintuitive for them to
Right.
be doing that. Who
Yeah.
knows? Maybe this could be part of the problem that led to what we have now with SIB, right?
Yeah.
Bank does
Yeah.
not have enough money to make deposit. Depositor can get their money out. The bank does not have um, short-term liquidity in terms of marketable securities to sell to make them whole again.
Hmm.
And that's what I'm saying. This is not just this is not just a SIB problem. It's a
Yeah.
systemic problem. If you
Yeah.
look at this, if this is a policy tool, and this is how the tool is being used at the central bank, that's problematic, right?
Yeah.
Like, imagine for a second we hear in a recession and Jerome Powell is telling us instead of cutting rate the way he had cut it, it been cut almost to zero, near zero. Instead of that, Jerome Powell in a recession, he's increasing rate on us. Can you imagine what's going to happen? Almost like
Hmm.
what Paul Volcker did in the 70s, right?
Exactly. Yeah. Yeah.
To
Yeah.
get inflation under control.
Yeah. Yeah. No, I agree with you. And when and sometimes I will even go as far to say, you said it in a nicer term without but for me, I like to call spade a spade. I like to tell people bluntly what they are and what they're not. What you do with that information is up to you. If you, depending on your cultural setting, some people get a little too sensitive very quick. Some people will say, you know what, in as much as what he's saying is true, but I didn't like the way you said it. What you just said is a euphemism way to saying that the central bank in Liberia doesn't know what they're doing. Like that's a nice way to put it, to say, "Hey, I don't know why they are doing this when they're supposed to be doing this." Like it baffles me. Before coming on this show, I was reading through the annual report for 2023, the central bank annual report, and some of the things that will go over this as well. But this was one of the slides that I thought was important. I mean, things that are in there that was important that I thought was just mind-boggling. It didn't make sense, especially when we've been in this uh, environment for 4 years since the pandemic. We've been in this economic environment, but here you are tightening when you're supposed to be loosening to make it easier for banks to lend out. So I'm glad you pointed out that way, but I think I just wanted to call it the way it is supposed to be called. So the other thing I want us to look at is what generally limits banks' growth, and how is that, or how does that leads to some of the problem that SIB is having, liquidity problems. So we look at sound diversification. I will just blabber out some of these things, and then you can just maybe go in depth on it. Right? Sound
Mhm.
diversification, meaning lack of sound diversification, meaning that if you are a bank, you should not just be exposed to the service sector,
One
which is a
sector.
big,
Yeah,
exactly,
just
which
you
is a
shouldn't be
big one in Liberia.
diversification means you
Right.
shouldn't put all your egg in one basket. You should put
Right.
it in several baskets. So if
Right.
something happened to one basket, you still have you still have eggs to carry on with. That's
Right.
basically diversification in a nutshell. So
Hmm.
meaning if you're a bank, you shouldn't be exposed, like he said, your all your loans shouldn't be given to one sector. So for example,
Exactly. Spread it
if
out.
people let just keep it where Liberia is, if you are giving, if people are coming to the bank to, let's say, the coal sector like charcoal, like I'll just keep
Hmm.
it simple. People are
Yep.
burning coal, and coal burners want a loan to go and buy kerosene to put on a coal bay, and a bank gave you loan, and the bank just decided to give loan to only coal burners, right?
Exactly.
That's what we're
Yep.
talking about here. So I mean that bank is not diversified because they are only lending to people who are making coal. And if
Hmm.
something happened to them tomorrow, say we're in rainy season and the trees then don't feel well, and the man not able to take the coal, able to burn coal again, he will not be able to pay back the loan that he took from the bank. Meaning the bank will not be able to get the loan back. The loan's gonna go back. We call that, what's the name for it? Non-performing loans,
Not
right? So
performing loans.
it will be
Right.
non-performing loans will become a lot on your book. You'll be holding these loans on your this bad debt on your books. You won't be able to make any kind of returns on them and stuff like that. That's in a nutshell, that's what we're talking about here. So to be in
Right.
a better position, you have to diversify, meaning put some of your egg in one basket, put it in several baskets so that it makes sense, so that if one basket is affected, you still have
Mhm.
other baskets to draw from. So that's diversification there in a nutshell. But go ahead, Gabby.
Yeah. So the other, and I agree, and those, like you said, the exposure, the concentration in sector, that the board's supposed to regulate that. First, it starts with the CEO and the management, and then the board's supposed to be looking at those things. Whether you're doing your board quarterly or every 6 months or so, or semi-annually, right? It means those are some of the things you're supposed to look at. What are the strengths of the bank, how they're expanding, how exposed they are in certain sector, because you don't, like, Percy said, you don't want to be too exposed to one sector. The other part here is the underwriting guideline, right?
Yeah.
Meaning that the underwriting guideline, meaning that, how do you assess the credit, the people you're giving credit to, they are
Hmm.
loaning to? That would determine the asset of your asset, the quality of your
The
assets.
quality of your
And then,
asset, yeah.
right, yeah, go ahead, you can expand on that. Right.
So no, so when you get loan, there's a loan officer that are supposed to go through all the information that you provided, and it's
Right.
supposed to vet that information. The vetting process is what begets the quality of the loan, right? So
Mm-hmm.
um if you came to a bank, you say again, let's just keep it simple. You want to burn coal. right?
Mhm.
You say you want to burn coal, we say, okay, we can give you money. You fill in the paper. The person that is supposed to approve that paperwork is called the underwriter. There should be some.
Yep.
There's a guideline for underwriting. Every bank's supposed to have one, right? And
Yep.
they will
Yep.
assess your ability to repay or whatever the collateral you're providing for the loan, right? And
Yep.
based on that, that's how you determine the quality of the
Yes.
loan, the
The
collateral
loan.
quality, and that's
Yep.
how they assess that. So yeah, that's basically.
Yeah. And one aspect of that that I wanted to add to. So for every loan that is given out in a bank, there's is the risk rated, meaning depending
Mm-hmm.
on some of the things that Percy said, whether the strength of the collateral, the strength of the guarantor, the strength of the business, the repayment, first source of repayment, second source of repayment, right? They look at those things, and those things are put into a model, and that model generates what we call risk rating, right? In the banking sector, it goes from 1 to 5, or what we call pass rated credit. I think
Mm-hmm.
between from 5 to 8 or 10, it's called low pass, right?
Mm-hmm.
And from there we go to special mention. From special mention, you go to substandard. From substandard, you go to doubtful. Doubtful meaning it's is in doubt or
It's not
being
gonna be there.
collected, right? So the
Yeah,
better the risk rating, the less money the bank has to
you
put
pay.
aside,
Oh yeah.
right, for when that loan goes bad. So the higher the risk rating, that meaning there's a higher chance it could go bad. That means you have to put aside more money. All
Money
of
for
these
that.
things that we're saying, you can go read up on it on with the Basel in the banking sector. That's how these things are done, right? So one of the things that I think problem that we see, I don't see banks having in Liberia risk rating their loans, and we'll get to that. You might say, Gabriel, you guys are just putting out this stuff, but we will get to that and tell you where those discrepancies are and why we think the central bank is dropping the ball and some of the banking sector feeling the effect as well. So I just wanted to leave that part out there. But the second one here, the person you talked about it earlier, I want you to expand on it, the inability to capitalize, um, capital to expand on
So
that.
yeah, so the inability for banks to capitalize. So when the way the system work as it is right now, right? If Gabby just talked about the loan making loans and the risk rating and whatnot after the underwriting is done. So typically, when the bank make a loan to you, that loan that the bank just made to you is an asset to the bank. I mean, it's a asset to the bank, right?
Yep.
The
Yeah,
bank
it is.
record that on the balance sheet as an asset, right?
Yep.
So they hold that asset until the loan matures.
Hmm.
When you pay down the loan, you pay the interest, you pay everything, and then as so the more loan the banks make, the more deposit. So let me go back. Sorry, let me reverse. So
Yep.
as you go and deposit money into the bank take that money that you get, since you're not coming back to the bank for it right away, that's a deposit. The bank said,
Exactly.
okay, since you're not coming back for the money right away, we can use this. We can use part of the money to make some more money on you, right? So they will
Exactly.
take
Yep.
part of your money that you deposit that in the bank, and they will make a loan to the guy that want to burn coal. So
Hmm.
the guy that want to burn coal will come to the bank and say, yeah, the bank will say, yeah, we got enough deposit. We want to burn. You want to burn coal? We can give you some loan, but we give you at an interest rate, blah blah blah. Then that's where all that underwriting that Gabby just talked about going to
Hmm.
go on with vet the guy, know the quality of the collateral or his credit worthiness, whatever the case might be. We'll touch on credit worthiness later on too. That's a very important one. And
Yep.
then the bank will give you a loan. The loan they gave you becomes an asset to the bank. Your
Yep.
deposit that you made to the bank becomes a liability, right? So that's how the bank manage that, right? How they become capitalized. Capitalized mean how much they have to have more money to lend out, right? They have
Hmm.
sufficient money to lend out. They don't if they have debt coming up, they'll be able to pay them and whatnot. So they have enough money. So that's what they call capitalization. The bank is capitalized, right? They have enough
Hmm.
money to cover debt and other related expenses and whatnot. That's what it is from a layman standpoint. And then
Right.
that's how you capitalize a bank. But since Basel, and let me explain what Basel is. Basel is
Right.
um is an is an organization in Switzerland that all the central banks around the world came together and said we need some sort of guidelines, you know what I mean, so that we can. It's not mandatory, it's not compulsory, but it's very important that you adhere to that. That's a standard. That's an international standard that everybody should adhere to.
Yep.
and mostly in an advanced economy, but it also applied to us in the frontier economy
Developing
also.
country.
So
Yeah.
that's what Basel is. This organization everybody come to. They promulgate rules and regulation on that are good
That
for
govern
central
banks.
banks around the world to adapt
Yep.
for the soundness of the monetary and economic system. So when you hear Basel, that's what he's talking about, Basel, right? So that's Basel all of the way. So and yeah, so you need to do that to capitalize your bank. So Basel one or so, the system was set up in a way that when you make deposit to the bank will take your deposit and make loans to somebody who need a loan, or have a venture going on that is profitable to them, right? The bank will vet anything profitable, and then they will take that loan and hold it on the books until you finish paying the loan. But what happened is, I have to explain this, Gabby, so people can
No, no, go ahead.
understand.
I want you to do
So
that.
what happened is, what happened is when we had a problem here in 2008, right?
Yep.
Where we had a financial crisis here and whatnot. And so part of the byproduct of
The
that financial
outcome.
crisis
Yeah.
was
Yeah.
yeah, we saw that um bank were not leaving, they were not putting enough money away on
Right.
per the loan that they made, right?
Yep.
So
Yep.
Basel said they came up with a weighted average that you were talking about. Basel
Yep.
said we'll put this scheme together for every time so that banks could have skin in the game. So because before it was just they were just using people money. So
Yeah.
Basel said for every loan that you put out there should be a risk weighted average for that. So for every loan you should have part of that should be made from your capital that you have
Hmm.
in your bank. You should be made part of it will be made from your capital, and part of it will be made from whatever deposit. So if there is a problem, so that the depositor is not just the one bearing the brunt of the problem, but the bank also have skin in the game. So that's what happened. So because of that, now the way banking is done in America, but I'm just talking America, but in
Hmm.
Liberia, the way it's supposed to be done now for banks to be able to recapitalize themselves quickly is that those loans that they have on the books, they're supposed to be able to turn it and sell it to investors, basically,
Yep.
right?
Yep.
There should be an investment class, which you don't have yet. We don't have in Liberia. You should be able to sell it to investors. Investors are supposed to come in and take this money, those loans off the hands of the banks
Of the
and give
books.
them money
Just give
back
them the
for them to
money.
be able to loan more loan. That's the circle now, right? That's
Yep.
the circle of recapitalization that's supposed to be happening. But what's happening is the banks have to hold in, like what happened in Liberia, the banks have to hold this loan until maturity, which can be very expensive for the bank because most of the loans are non-performing. A good portion of them are non-performing, and the ones
Yep.
that are performing is very
The
it's hectic
duration
for the
is
people
very
to
long.
make
Right.
yeah, the duration is long, and the payment frequency given the economic challenges in the country, people hard to make payment back on the loan. So that's the
Right.
problem you have there. But that's a mouthful. I'm sorry, but I had to explain
No, no,
the
I'm
underlying
glad you were
trends.
able to elaborate on that. And the part on duration that you're talking about, I just want to expand on that. So the way um, risk things banks or in financial market as a whole, financial service as a whole, look at risk. The longer, let's say, if I lend to Percy, the longer Percy has my loan,
It's
the
a risky
higher the
loan.
risk of him
Yeah.
paying it back, right? So
Yep.
if I'm giving him money for 20 years, I would charge him higher rates than I would do if I give him that money for 5 years because I know in five
Hmm.
years the time is short, right? But for banks in Liberia, as Percy was saying, because they don't have a secondary market and the duration of the loan that they're giving out are so long, I mean the exposure to the individual, and then even in 5 years, anything can happen in 5 years. The person may not be able to repay, and because that time is very long, and the repayment, like we said, some of them are not performing, they are not getting the entirety of that loan back for them to deploy that money somewhere else and invest in other things. So their money, meaning in essence, in another word, their money is tied up in these loans. And they're
In
not
these
able to
loans, yeah,
turn
and
it
they're not
around
getting
quickly,
yeah,
right?
yeah, they're
Um,
not able to.
and the last, yeah, go ahead.
No, cool, go.
Yeah, so the last part here, we put on here is was poor leadership, or in another way, look at it as poor management. And basically, some of these things that Percy and I have covered so far, it could be that the people at the management level, the CEO or the board, don't understand these depths of in things to be able to guide and regulate, I mean, lead the banks on these things, which could mean, a poor management. It could be from that uh, industry knowledge, and also from the management side and how to run some of these things. So again, poor
Yeah,
leadership
look,
can compound on these
and
things
I
as
don't want
well.
to limit this to just the banks, right? The poor
Right.
management or the poor leadership. It's not just a banking problem. It's
Hmm.
a central banking problem. It's a national government problem, right?
Yep. Yep.
I just explained about how it's hard for the banks to do this and do that. Part of the reason banks to have to be in a way the bank hands is tied. I think there was a show me and you came here and we talk about the need to identify assets, individuals, and businesses.
Ah,
The fact, yeah, that's a
exactly.
very that's the underpinning of all what we're talking about here.
Yep.
And that's not a banking function. That's not a problem that the bank has. It's a national government problem. The
Yep.
government of Liberia should be able to identify citizens. Every individual in the country should be able to be
Hmm.
identified. The asset that they have should be identified. If you own a business, they should be identified. That's the basic backbone of a system, a banking system as it is, so that the banks
Hmm.
can be the reason banks have most of their loan underperforming. It's not that they don't know where the individual live, but they don't know what kind of asset this individual also have that they can have lien
That they're
on,
landing
right?
on.
To get recourse, right? So all these things, it's the poor leadership we're talking about. It's not limited to, yeah, the bank management has their own issue, the board has their issue. The central bank is an integral part of this problem, as well as the
Yep.
national government. So poor leadership all around is the causation of some of these problems that is obtaining in the country.
Yeah. Thank you. Thank you for expanding on that. So let's move on to um, some of the, I think some of the things we'll cover so far are some of the challenges that look at SIB banks, I mean SIB bank, but also not just the banking sector in general, but also the financial sector in general in Liberia. And as I said, we talk about these things, and um, we're not just talking it from surface level. We look at some of the all the most of the stuff we're talking about are basically from the central bank annual report. So we're not just making things up here. So, but most importantly, also what we want to offer are some solution as well, some idea. If you're a banking professional in Liberia, or you're leading a bank in Liberia, you're at the central bank, at the regulatory level, some of the things you should be advising these banks on what to do. But in general, we want to offer some ideas and solution of things to look at to put this banking sector in a sound place, right? So we took this slide from the central bank annual report for 2023 last year, and this is basically, actually, I think we should look at this slide later on. Let's look at this one. Um, uh, okay, maybe let's talk about this. So basically, if you are in, I will just talk about this, and then you can jump in there as well later on, right? So if you are in, either you are a CEO of a bank, right, and you just, in the case of SIB Bank, where you just took over a bank, you bought a bank, but you're looking to expand, and you don't know, let's say you don't know the industries in Liberia, where you see every banks right now, they're lending to the people in government, and they're doing trade finance, right? Meaning those people that can do shipping, where you can just give the money to them. The moment they bring their container, they sell their goods and they turn it over to you. That trade finance, that's a quick way to turn money over, right? But you're also looking at all your peers bank, they're lending to people in the government, official in the government, because that is where the capital is. Here is a here is supposedly a quote from the central bank: industries where that drives the economy of Liberia. You look at the agriculture, the forestry, the mining, manufacturing, and services, right? So if you look at this, if you were to just go at the annual report every year and look at these things, it'll tell you where how to even that first, it'll tell you how to diversify your investment services, how to, I mean, your banking services, what area you should look at, of how to, where to invest, instead of looking at every uh, you know what every other bank is doing, where they're going after government people that are working who work in the government. And again, we talked about diversification earlier, where if you're so concentrated in that, if something happened, let's say the government start paying people within 3 months or 6 months, that means all those people you lend to in our government services who works in the government will not be able to pay back their loan, and that could cause a liquidity problem. But that's the reason why we print this slide here, that I think it could be a good driving tool. Not just this slide, the annual report that the central bank puts out. Read through it. You go to this space specifically. It'll give you a good place, an idea in terms of where most people get their daily bread from. What are the sectors that drive Liberian economy, and how you can invest in those sectors to make sure you diversify and have a sound bank as well. Yeah. All right. So the next one here is the balance sheet here. Do you want to talk to this, or you want me to?
Go ahead.
Okay. So the
I'll
balance sheet
buttress.
here, again, if strictly from the central bank annual report for 2023. Actually, this is a 3-year measure, but this was from the 2023 annual report. So if you look at the balance sheets of the banking sector in Liberia, you this is the assets, and these indicators, the blue, orange, and gray line. The blue line is for 2021. The orange line is for 2022, and the gray line is for 2023. So it'll help you read this better. So if you look at the assets in 2021 compared to uh, 2022, right? Much
Mm-hmm.
asset quality, higher assets, the same thing, right? With their, you look at their loans, the same thing. If you look at the capital for 2021, if you look at their deposit as well. So in general, if you look at this balance sheet here, you will see that, you know, from 2021 to 2022, you will see there's a trend, right? Trend where there's a improvement in terms of the balance sheet strength, right? So if you look at it on the onset, you might say, hey, this is a strong balance sheet from what we're looking at, right? But let me tell you how that is could be farther from the truth based on what we talked about earlier. Some of the things you should look at when you're assessing the banks or a bank balance sheet in terms of to assess it. How some of the things we look at in terms of the strength, the liquidity management, loan to deposit, non-performing loans, are some of the things that you use to assess bank. And let me tell you how that could, yeah, be strange here. It could be could differ, right? So if you look at again, this is the same financial industries, financial sounding indicators. So if you look up here,
Mm-hmm.
you will see the gross assets, exactly what we show you on the balance sheet. The asset grew, right, from 222 to 319. The
Mm-hmm.
net, the net asset, same thing. Loans and overdraft, the loan grew. If so, if you're looking at this, everything is growing from even the loans and accrued interest, right? And then you look at provision for gross loans, same thing, right? But if you look, I don't want to go over all of these. If you look out to the not performing loans at the bottom of this chart, all right? The not performing loan, I think Percy talked about this earlier. It grew from, it went up from 16.4% to 18%. So for every dollar they issued in loan, 16% of it, or 16 cents, is what would they were not able to pay back 16 cents. Compared to 2023, that number rose to 18 cents, right? Now, what we talked about earlier is how to assess banks in terms of the non-performing loans, right? So again, I talked about the risk rating earlier. So the risk rating, if you risk rate a loan, the higher the risk rating, right? That means the more money you have to put aside. If a low risk rating, that means that that asset is strong. There's not too much money you have to put aside in case that loan goes bad, right? So that means again, if you have a lot of non-performing loans that are not performing, you're supposed to put on, this is accounting rule for, you know, if you took accounting, this is accounting rule for The higher the non-performing loans, the more asset or capital you have to put aside to service that non-performing debt in case those loans go bad. But in this case, what I showed you here earlier, if you look at how the non-performing loan increased to 18%, but if you look at the provision that the money that the provision for non-performing loan, meaning the money they put aside to service the non-performing loan, decreased, right? Again, I don't know if I'm making sense here. If you are assuming, if you are telling us that the more loans we issue, 18% of it are not cannot be repaid, but instead of you putting aside more money to service the loan that cannot be repaid, you've decreased the money that being put aside for the loan to be repaid. Let me tell you how that can affect uh, your liquidity problem. Meaning, because you don't have enough to service your loan that is put aside, it creates a liquidity problems on the balance sheet, right? It creates a problem. That means your assets are not performing, but neither are the provision that you put aside to service them. So it becomes a cycle to get out of, right? Um, Before I even you wanted to come in
Go back to the previous slides. No, not this one. The one before.
this one,
So if you look at if just looking at this slide, it
right?
seems like if you just look at from your eye level, right? Just from a straight eye level, seems like asset is been increasing, right?
Yeah.
From year on year, asset is increasing. The amount of loans that's been made is also increasing,
Hmm.
right? Um, but capital has not
Yep.
increased by a lot.
Yep. It's flat.
The deposit is increasing, but
Yep.
capital is not increasing, meaning the banks are not profitable. And
Hmm.
so, where you talked about the money put aside to service the bad
Not
debt
performing.
or the
Yeah.
non-performing loans, the banks usually take that from their profit, and the profit is
The
part of
capital.
this capital thing right here. So
Yep.
to the extent that the bank are not profitable like they're supposed to be, and they keep so what I'm trying to say is the fact that they're putting smaller money aside to service these bad debt is a function of the
Off.
improfitability right here,
Exactly.
right?
Yep.
The fact that these banks are not profitable, that's why they cannot afford. The profit margin is not that big, so they can
Hmm.
afford to put enough money aside to say the bad debt or the non-performing loans will be able to service it or do something about it, right?
Yep.
So that's a function of this capital being very small, the capital part of it being very, very small. That's a
Right.
function of it. So when you go to the next slide, when you put that in the numbers, so now to make sense of these numbers here, you
Yep.
see in terms of gross assets from year on year, you see the assets is being increasing,
Hmm.
but the what's the part that's down here? The non-performing
They're not
loans
performing.
is
Right.
also the money put aside for non-performing loans is decreasing. So you can draw that parallel from the fact that capital hasn't been increasing, even though
Hmm.
loans have been increasing, but the capital part of it, right, which also includes your profit margins and everything else that are up in there, right? It's very small. So to the extent that it's small, that's why you see they are putting very little aside for these non-performing loans. But that also could mean, well, is there another slide?
Yeah.
Yeah, so it's just the same thing, right? The non-performing part of it. So, but that could also mean, and that's the struggle with banking in Liberia in and of itself, right?
Hmm.
I don't want to beat on the banks. I think they can do better. I think they should do better. But to have a vibrant banking sector, the system has to be, I'm talking about the national system itself, because the banking system feeds off of the national system that we have, right? In terms of identification, right?
Hmm. Hmm.
The system feeds off of that. To have a vibrant banking sector, you have to have a very, very well put together national identification system, meaning
Hmm.
people needs to be identified so that when
Yep.
bank goes to make loan to people, they know who they're making the loan to, where
Yep.
people, what kind of asset they have, where they live, all those things in terms of identification needs to be in place. That's not the bank's fault. That's a national government fault right there,
Hmm.
right? So to the extent that the bank hands are tied, and yeah, I can beat them for not diversifying, because if you want to make loan to some of a guy come from you from Bon County and say, I want a loan, what do I
Mhm.
use to identify you where you live? We don't have we don't have a zip code system or address system. They just tell you they may live in Plainfield community. What do they call Plainfield community? The houses there are not number. We don't know these things. So all these things, it feeds the system itself, the banking system itself feeds off of these things. So the banks are limited in what they can do and who they can lend to in a way. And our people
Mhm.
themselves are limited also because they cannot monetize their asset, right? I have a
Mhm.
farm. I should be able to raise loans from that farm, right? I
Mhm.
should be able to say, hey, I got farm here, I got my go farm here, I want $50,000 loan. The bank should go and assess the farm and see how much you can, you know what I mean? Identification. I'm identified, my farm is identified, and everything around that. So the bank has a very strong pitching to lend to me, right? So they can make a loan to me because they can identify me, they can identify my asset, they know where I live in terms of my address, they can all those things, they can identify it. So the banks can say, yeah, we can get Mr. Harris a loan. It's fine. And they got all those things on paper, they know where to go. And then
Yeah.
my assets could be leveraged for the loan. It could be collateral. It could collateralize the loan, and that's the problem in Liberia. Most people, Liberia, when they tell you Liberia is not a poor country, that's true. Liberia is not a poor country. Our people have assets. It's just that how do we monetize this asset?
They can't monetize it.
The government have not made a concerted effort for people to be able to monetize their asset. They got people
Yeah.
sits on property that's valued couple of hundred millions of dollars, but there's no way to monetize that. It's because they
Yeah.
can't identify it. They can't identify the individual, they can't identify the asset, they can't identify the location, all those things. That's what inhibiting growth. And because of that, because of that, there's no innovation again in the system. Because if you could identify people, asset, and whatnot, then the bank will have a leadway. Like we're not going to be giving loans to people who want to make market. We'll be giving loans to people who want to build houses, people
Yeah.
who are making farms. And, so
People who
the
are starting
diversification
businesses. Right.
process that we talk about will be in
Mhm.
full swing. But absent that, the banks are limited to a few group of people or a small pool of people to make loans to. And most of these people I mean, it's hard to diversify. And most of the people they are only in one sector, so to speak, which is the government sector by and large, right?
Yeah.
So if
Yeah.
anything goes wrong, the government don't pay 2, 3 more, 4 more, 5 more. Anything goes wrong with government finances and whatnot, the banks, you will have these non-performing loans from the banks. They will be sitting there, right? That's what happened. So and that's part of the problem also.
Yeah. No, thank you. I think you know elaborated on exactly in detail what I was trying to uh, talk about here. And the last bullet point on that, which is a highlighted item, is the loan to deposit ratio. And I think if you remember earlier during the show, we talked about the loan to deposit ratio, meaning loan to deposit ratio is just a measure to assess the bank's quality in terms of its assets, right? How well it is deploying its assets. Having for banks, it's just like you and I having too much asset, money sitting in your bank account doesn't mean anything if you're not putting that money to use to make you more money, right? Inflation will eat it away, right? So in this sense as well, the same thing applies to banks or financial services, right? If you have deposits on your hand, you're supposed to put that deposit to use, meaning you're supposed to loan it out. This is why it's called the loan to deposit ratio, meaning the amount of loans you give out to the amount of deposits you have coming in, there's a sweet spot that is allowed. It's usually between 80 to 90%. It cannot be too low, it cannot be too high. And let me tell you why. If it's too low, meaning you have enough deposit on hand that you're not putting to use, meaning you just have this capital on hand, deposit people to giving you money, but you're just sitting on that money. And if you know, I think Percy pointed this out as well, on the balance sheet, a deposit that bank takes in are liabilities on their balance sheet, right? So if you have all these deposit coming in for you, you might, and this is why I think most people in Liberia or the central bank actually look at it. They think that having these deposit on your hand that you're not doing anything with makes you seem stronger. You're not. It is a liability on the balance sheet, right? So in our case here, this is 2022 and 2023. That number is about in 2023 is about 30 points, let's say 31% if you round it up, right? So in essence, I think the way they're looking at the reason why you talk to people in Liberia, they'll say, oh, the banks are very strong, is because they look at the deposit on the bank balance sheet and they think that's a lot of money. No, but these banks are not putting that capital to use, right? As I said, it's supposed to be between 80 to 90%. And the reserve ratio gives you a requirement, meaning that every dollar you take in, if it's a Liberian dollar, somebody deposit, you're supposed to invest 75% of it and keep 25% for withdrawal. If it's a US dollar, you're supposed to invest 90% and keep 10% on hand. But if you are having a loan to deposit ratio here that is only 30%, meaning you're underperforming on your assets, you have a lot of capital on hand, apparently, that you're not putting to use. So it's either you don't understand the fundamental of banking or you just don't know how to run a bank, because anybody who look at a bank, they wanted to, even if they wanted to invest in you, if they look at this, if there's this is somebody who's serious and want to put their money to use, that's one of the things they will question you about. Hey, before I put my money into this bank, how come you guys have a lot of capital, I mean deposit on hand, that you're not investing in the market here, um, but and again, if you're in Liberia, you might question, you might argue and say, this is me that was sound, we have enough money on hand, but again, this is a liability on the bank balance sheet. So
and
I
and
think
and,
this number
and
is yeah.
yeah, just to buttress, the bank have to pay interest on those on those deposit, right?
Exactly.
So
Yep.
think about it. Think about it. The way the bank is taking this money, they're gonna pay interest. The bank gonna pay 1% interest for all the deposit that it has on hand, right? So if you have
Hmm.
50,000 deposit on hand, right, you gotta pay 1% on each of those. That's $50,000, right? Is that math correct?
What you said? Say that
Whatever.
again.
So if you have 50,000 deposit on hand, you have to pay 1% on each of them. So that like five,
That's
10,
50,000, $50.
yeah, $50 on each of them, right?
10%.
So
Yeah.
that's a debt. That's what we mean when you say the deposit are liability. So it's very important for you to as those deposit come in, for you to be making those loans to people again. But there is a short coming there in terms of the way the system actually works right now.
Sorry,
The banks
five
is gonna
thousand for 10%. Right. Yeah. Go
the
ahead.
math is not important. It's what we
Yeah.
explain is important.
Okay.
Don't
All
get
right.
hung up on the math, right?
Yeah. Yeah.
So
Yeah. All
you
right.
have you have to make those loans faster, because you got time deposit that you have to pay interest on, right? So you
Exactly.
have to
Yeah.
make loans to people out there, which are your asset, right? So your asset will be actually being monetized there, because the loans is what's going to pay you back interest, and your interest you're going to take, that's where you get your profit from. You take part of it, you
Hmm.
pay the man that guy deposit, you take the other one, you keep it for retained earnings or
Hmm.
dividends or whatever it is, you keep it for that purpose, right? So it's important. So just because you have a big amount of deposit doesn't mean your bank is healthy. Then you look at the ratio that Gabby were talking about, is it shows the kind of inefficiency in how you're utilizing your deposits, right? So
Hmm.
again, he said there is a sweet spot. Of course, there is a sweet spot. You can be too under, and
Hmm.
you can be way too over, right?
Hmm.
So there is
Hmm.
a sweet spot there. I don't know if the central bank defines that, because those are things that the bank's supposed to be doing, right? In the
Yeah. Yeah.
research and development, those are things you're supposed to be doing at the central banking level, setting these standards so that banks can fall in line with, so that the banks can know that what when they're healthy or when they are not healthy, and when they are
Hmm.
applying their asset efficiently, and stuff like that. Those are things that the bank's supposed to be well immersed into. But I mean, to the extent that the system is still functioning the way it is functioning, it's kind of archaic, right?
Mm.
There's no innovation in the system. The kind of sophisticated product that we see, me and you see on a day-to-day basis, the way it works. I don't want to go there. Well, so we don't even have that kind of innovation yet. People are still thriving on this old, when banking was invented in Florence, right? During the
Hmm.
medieval ages. That's how we still carry on banking and most other stuff in the country. We are not keeping up with time and the advancements and stuff like that. We are not, you know.
Yeah. Yeah. So I think that is in terms of what we need to talk about from the slide perspective. That is, I think the concludes the slide here. The question that I think I want to pose to you then is, given what we just talked about and what we've pulled from the central bank annual report, um, what do you think should be the, if you were to be in charge, either the central bank, what do you think you would have done, or what are some of the things that you would do to to not just strengthen the banking sector in Liberia, but to make sure that it is fluid in and sustainable over time, and becomes, up to speed to where the rest of the banks should be, where the, you know on par with the rest of the world. I know it's a mouthful of question because there's a whole
Yeah, it
plethora
is.
of things, but just take a bite at that meat on the bone, and if you can chew it or just throw it back, you know.
um, if at the central bank, if I were at the central bank, I would try to first thing I'll put a lot into research and development, especially research, right?
Hmm.
So that
Hmm.
the central bank can be a reliable and institution in terms of financial and economic data, right? I'll put a lot
Hmm.
into that. One, two, just I mean, because the central bank cannot force the national government to do national identification. That's a national government function. The
Right.
politicians supposed to be able to do. But what if I was there? One of the informal tools I would use at the central bank was what people did in Japan, right? After
Hmm.
World War II, Japan wanted to invest in other industries, right? And they couldn't force banks to do that. So they came up with something called window guardians, right? Window
Hmm.
guardians was like an informal policy. What the Bank of Japan nudged banks into
Hmm.
lending into those sectors, those growth sectors that the government was interested in and knew that it had a lot of potential, right? So
Yeah. Yeah.
I would do some sort of window guardians there, right? Encourage
Okay.
banks to lend to mostly to people in agriculture, in the process
Hmm.
help and put in place programs that will make it much easier that because the banks needs to be assured that they're going to get their money back from agro businesses and whatnot also, right? So that's
Right.
one sector that you want to focus on. But I will use window guardians. It's not gonna and I'm not forced. You can force the bank, right? You can only
Right.
use window guardians. You can incentivize them to make loans to those growth sectors. That's two. Secondly, I would want to expand the CBL, right? Because when we
Okay.
talk about these things, we talk about it. Most of the policy impact in Liberia, but the central bank is felt within Monrovia and the environs that are around, and maybe one or two counties. It's
Hmm.
not felt in. It's not felt
The
in other
outer
parts of the country,
the
right?
hinterland. Yeah. Right.
Those and there's a lot of potentials that sit out there. So you want to see how best you can expand the branches, even if you don't want to do it like elaborately like we have with the Fed here. But make sure you have central bank branches in
Branches
other places. Even if you don't want, if you can't afford, let's say it's so expensive, let's
right
divide the country into
into
different
five or four.
into maybe three or four
Yeah.
districts, right? You have one, but somewhere like Ganta, Nima County needs to have a presence, right?
Yep. I
Because
agree.
that's a hub. Somewhere
Yep.
in Maryland, there needs to
The
have one,
southeast.
right?
Right.
The Southeast needs to have a central bank branch
Right.
that will supply that side. Then you want
Right.
to go maybe Kidman. You could choose anywhere Kidman, Lofa, but you want
Hmm.
somewhere that is actually business oriented, where business are growing and whatnot. So that's another thing I want to do. I want to expand the presence of the central bank in the country so that when we make policy for the central bank, it's felt in every part of the country, and not just in the people in Monrovia alone that say, yeah, the bank, they know. You want to feel the presence of the bank in other parts of the country, and the people who doing business on in that part of the country shouldn't have to come to Monrovia or depend on Monrovia and whatnot. They should be able to go right there, right? The bank, like you
Hmm.
guys in Boston, right? That's a Fed in Boston. The Fed in
Hmm.
Boston take care of the entire New England region there, right?
Yep.
In terms
Yep.
of making sure they have adequate cash on hand, all those different things. I want the Liberian Central Bank to be the same way. You don't have to be like the United States, but you have to
Hmm.
have a presence. You have to service those people so that those places can create the economies can grow organically also. They don't have to be stifled by the lack of your presence there, right? So
Hmm.
those are the
Hmm.
kind of things that I want to do. Those are the three principal things I would like to do if I was central bank governor on day one. I would like to
Hmm.
implement that in the first year or two. Those things have to be out of the way. Then we can start doing the other things, getting the banks together, making sure we have banks interacting with one another, making sure we have a discount window that is actually functional, that serve as a lender of last resort for banks, right? But lender of last resort, but we want to make sure banks are interacting. Maybe form something like an interbank lending market that we have, the federal funds market, where banks,
Yeah.
when you don't have enough deposit to cover, or you can go to your friend that have more, because that have more today and borrow from them over a
Yeah.
day or
Yeah.
two. You know what I mean? and
and
pay
pay
him
them
back
back.
interest.
Yeah,
Let
yeah.
it be done there. You should only come to the government as a matter of last resort. But another thing I would also want to do that is lacking in this situation that I think that could have saved SIB precursor is to
Yeah.
have a is to also have a deposit insurance, right? A
Mhm.
deposit insurance entity that would insure bank deposit up to a certain amount, a certain level to make the system. It makes the system move sound, right? You have a deposit insurance scheme wherein ordinary people deposits are insured to some extent. It cut down the worry. It take away the fact that you have run on banks and whatnot. But by that also, I will also want to admonish me, central bank governor should admonish the politicians to have a rating company, right? Like we have Moody's and whatnot. Encourage, pass a law so that we can have rating agencies in the country. If not agency, but agency, not if not agencies, but agency, right? Where
Mhm.
debt are rated, right? Because that's the way you get the investor class to come in. People want to make sure they paying this thing is worth the money that they are buying. So yeah, come together and put together and let us have a rating agency because that's how you get the Moody's, the S&P, and Fitch to come into your
Stand up
country,
for
right?
right, right.
By having your own local rating agency because they feed off of that, right? So that's how you open up the market for investors to come in. Nobody's gonna come put money into Liberia and the debt not rated, right? I don't know what I'm buying. So somebody have to be there to tell me, yeah, if you're buying this is worth it. This is what the rating is. You know what I mean? People will have to, and then maybe S&P then later will come on and come over and give more gravitas to that. But we have to have our own stuff, right? And
Mhm.
those are the few fundamental things I want to turn around there first before I do anything. Research and development, and then the rest will follow.
Yeah, no, man, that's I expected maybe one or two, but I think you give a whole you know whole list of recommendation. And I agree with you on basically I think one of the most important thing you mentioned was being for them to be able to identify individual and properties, because that's
Yep.
how that's how wealth is built. If you have, like you say, you sit it on a plot of land, you can't assess it, you can't put a value to it, the banks cannot put
No,
a value to it,
can
it
do
become
nothing with it. It's
worthless.
useless. Yep.
I like the credit rating part as well, because I think in addition to what you said, I don't really think we need to create one indoor. We just need to do the right thing, or invite the Standard and Poor, the S&P, Moody's over to do an assessment, and they can tell us what we need in order to qualify for at least a low
Yeah.
grade, right?
I mean,
Credit rating. Even if you have a junk status, which is depending on what system you use, a B or C or whatever it is,
yeah,
which is a junk status, at least you know if you're issuing debt or whatever. It's junk status. You're gonna pay a premium for whatever fund you want to raise, but at least you know there's something there you're working on, as opposed to not having anything at all to work with. So I
agree, and it
definitely agree.
exposes it exposes the country to the international market also, right?
Exactly.
So
Yeah.
this incestuous relationship we have with these international institutions, it's not going to be
Mhm.
there if you can go into the internet, into the open market and raise your debt, right?
Exactly.
It will encourage you to put your shit together because before you go into the international
Exactly.
market, you have to get your stuff together, right?
Yeah.
So it will encourage all those things.
Yeah. No, I agree. I also agree with you in terms of expanding the the uh, the CBL to have different branches. And again, these are like you just pointed this out. These are no-brainer things.
Yeah,
That if you
yeah,
want to bring the financial market, and I usually let me go off a tangent. I usually say this, right? People always look at this the 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 way Rwanda was able to pull away and head into a middle income country, but they don't understand some of the things that country has done. They just look at Kagame is a good leader, but one of the biggest thing that they were able to do is build a financial market that is trustworthy, that is liquid, and is now a financial hub in Africa, right? I say this because I
yep,
always like to point people to the story when they started out to build what is now becoming the biggest airport in Africa as a hub. they brought in the former CEO of Credit Suisse, Tijan, who was an Ivorian,
Mm-hmm.
ran Credit
It's an
Suisse,
Ivorian
right?
guy. Yeah, yeah,
And
yeah.
he structured them, and that's why they were the Saudi Arabia was even able to trust those people to say, you know, we're going to give you $2 billion to build an airport. Their system is able to withstand that. They propel themselves to become a income country by the financial system that they currently have. You can be anywhere in the world and register a business in Rwanda. That's because you're able to lend. They're able, you can borrow as well, right? They're able to identify their citizens and all of those things you pointed out as well. But the central bank should be able to do something like that. If we want to be seen, like you said, as a place where a system, we want to build a financial system that other investors, whether inside or outside, can trust. We need to expand the central bank, identify people, individuals. For me, I think the biggest thing I want to hone in on is the ID and being able to identify property, because that's how the bank is able to lend to people, and they know
Yeah.
that the asset that they're lending on is identified. That I will not let you will not come to me and say I have a plot of land in Grand Cayman that I lend to you, and then you take that same plot of land, you go pledge it to another
Go send it
bank
to
to go
somebody.
take
Yeah,
out
no, you
another.
can't do that.
Exactly,
No.
because if we have that system, if you take that land and go bring it somewhere after you have pledged it to me as collateral, I'll be able to go in the system and say, hey, person, you've given out this loan, this bank to, there's a
Yeah.
SIB bank is in first place already. There's not much asset left on this bank for me to lend on already. So it created a safe and sound system that allow people to enterprise, for businesses to grow, and build the country as a whole. So for me, I think as we talked about these
And
things, we've seen successive president upon president upon president, and we've seen governor,
no,
governor, central bank governor come in and they just wing it and act as if they know what they're doing. But if you look at the report that comes out every year, we run into this problem, and you have mouthpieces that come out and say the banks is sound, the banking system is sound, but we keep running into this problem and we never grow. We're stuck in this place. So
the
yeah.
the thing is, part of our problem also is psychological. People, Liberia problem is not education anymore. I keep telling somebody it's not. Look
Hmm.
at what me and you can sit down here and discuss this thing from now to tomorrow morning. I mean, it's just because
Right.
it's experience is what I mean. It's not education alone, but it's experience. It's hands-on work that we do on a day-to-day basis.
Exactly.
We know we understand how the system works here and how it
Hmm.
should function and why. So it's not a problem. So like drug problem is not a problem. It's not education. It's not competence anymore,
It's not
right?
education or knowledge, right?
The guy that wrote the charter for the African Development Bank is a Liberian, Francis Chuchu Horton. People
Hmm.
forget that, right? Liberia was the one that wrote. So Liberian that wrote the charter for the African Development Bank today. It was
Wow.
actually a Liberian individual that did that. Francis Chuchu
Hmm.
Horton, he's a veteran banker, he's a financial expert and whatnot. So I mean, the name is there. So maybe our people think that okay, this is who we are, this is what we aspire to be. No, no. There was a time where that country of ours, despite whatever you say about it, it was respected out there. Liberia was a respected was respected country out there. So to bring this up to say, man, these are the giants that whose shoes or whose shoulders we stand on today. The African
Hmm.
Development Bank is a continental institution, is a household name, but we don't know our contribution to that bank. There will not be an African Development Bank with all Liberia. Say what you want to say about Old Man Todman or OAU or AU with all Liberia. We are the founding member of these institutions on the continent. There's
Hmm.
no reason why having funded the continent or organized the continent in an orderly manner that we can get it done today. It's just baffling, it's baffling. But I
Yeah.
I, I digress.
No, no, I agree, and I think, but I think you have to look at it too, though. In as much that we have been a contributor to the African Development Bank, and we have not gotten our own financial system in order. Look at Africa. You go in Africa, there are social general that is there. one of the biggest
Yeah, the
bank
French
in
bank.
France
Yeah.
is there right now,
Mm-hmm.
right? You go
Mm-hmm.
to Ghana, the same thing, right? These banks do not go anywhere unless there is a system, there is capital, there is resources, there are enterprising, wealthy people coming up who capital they want to put to use, right? That means that country is producing wealth for its citizen, and there are citizens who are becoming
Mm-hmm.
wealthy in our country. That's how you see these banks will now start going in there.
Mm-hmm.
But we are just having, you know, 18 foreign bank. These are just smaller banks that just do
Not even
like
Liberian owned bank.
not only
It's like
Liberian
foreign
only,
banks.
right? Um, eight, I mean, not 18, you know, foreign banks that are just there. The two commercial, not like, I mean, Liberian banks we have, I don't know how sustainable they are. So what I said is to say that no president has made that a priority to say, I can have the God drafted policies that look at every aspect of the economy. If I don't focus on the financial sector in terms of creating a fluid financial system, those policies will not go anywhere. I would just become just like any other president who will just come and his or her only source, my only source will just be going to the international community to raise capital, or going, you can't even go, like you said earlier, you can't even go on the international market to raise money. So you're kind of first coming in a straight jacket. But if you're coming in a straight jacket, you have your eyes open to see the things that are putting you in a straight jacket. At least you can speak to them and talk about and work through some of this. Some of them is, as I said, we have not focused on the financial sector and see how important that is to creating the country that we want. Instead, we focus on the MDBs and these other supranational countries that lend
Yeah,
to us. But if we
because
focus
because
on
that's
the
what that's
financial
what that's
sector,
what we know.
right,
That's what most of our leaders know. That's what they have
right,
come to consider the norm, right?
right,
Mind
right,
you, Ghana, just recently she fell prey to her own problems also and wanna she can reset it. But Ghana used to go into the international market and she would raise billions of dollars of debt.
hmm,
Billions. People are willing to give Ghana from the international market were willing to give Ghana billions of dollars of debt. Right? What thing Ghana got that we don't have? She only
no,
had while we were
she
killing ourselves, Ghana was putting her horse in order. While we decided to blow up whatever minimum progress we made over 100 and some more years, while we decided
hmm,
to upend it, Ghana was building herself. Ghana was putting her structure in order. So that's the difference between the war years and what would be considered peaceful years in Ghana, right?
hmm,
People had the freedom and ability to go do productive stuff while we were running from bullets. There was no productive activity happening in our country for years, for almost 2 generations. We were on that stuff while other people are
hmm,
making progress, and we look at them today and say, "Oh yeah, we're gonna." No, it would take time for us to get there, but we need, like you said, the kind of serious leadership, the kind of intentional leadership that needs to come in that we trust, that will bring serious-minded people, again, serious-minded people to do
hmm,
the work, to do the meaningful work that needs to be done. Liberia is not going to get built on the backs of what we have now. It's
yeah,
not. We're going to go another 200 years and we'll still be where we are. You need serious-minded people. You need to be comfortable in your own skin and don't be insecure about, oh, the person. No, bring serious-minded people who will do the heavy lifting. It requires that, who will build
hmm,
institutions, who will put institution in. I mean, will put things in place so that the country can grow meaningfully for everybody. It shouldn't be
right,
for, not just for a small group of people and their friends and whatnot. I'm talking about for everybody. The feet should be level so that everybody can take advantage of the system. We should have a rule. Hey, if you
hmm,
play by these rules and you do these things and you do that thing, yeah, you should be able to get X, Y, and Z. We should have that
hmm,
system there. There should be no shortcut to those things. It shouldn't be
right,
because you're able to go in government. Government should be the last place people go to get rich. Because you think about government is everybody money,
hmm.
right? It's your money, my money, now everybody money. Now if people playing with that, they will say
That's
that
for
private money. No,
taxpayers,
that's not. That's
right?
that's not it. That everybody money that people playing with, and it shouldn't be. And when you play with everybody money, you should be accountable. One, you should tell them how you spend it. Two, and all those things. If I see you enjoying from everybody money, that's a problem. That as a
Hmm,
society, we're supposed to have a problem. The fact that politicians are the richest people in the country, it tells
hmm,
you something. The fact that few group of people, if you can be hungry today and get in government tomorrow, and you start owning cars, building big houses, and all kind of things start happening for you, why you couldn't do that when you were not in government? It tells you there's a problem here. It tells you the government have become this place where people see it is a get rich place. You go there and get rich. I don't want to accuse anybody of corruption, because then it'll be like, oh, you get no evidence. No, I don't have evidence. I don't want to accuse people. But as a Liberian, just thinking about it, the way I know government to be, people go in government to serve. You don't go there to get rich. But
Yeah.
lo and behold, people go into our government and come out well off than the ordinary people. If I'm it should be, people should be vexed in their country that my life is not improving, but the guy that I elected to go represent me and represent my causes, he gets rich overnight by somehow he's my representative. It just doesn't make sense.
What happened if that guy gets the money and he gives you a little bit? I think that's the norm right now, where you get all that, you take all that money and you just hand me every now and then. I go to you, Bobby, you are honorable, just whatever, and you just hand me a little thing to just shut me up. For them, that is just, hey, this guy is not selfish, he's doing the right thing. But I think for them, what they're not understanding is this person is robbing you of your future, not
robbing
just your
you and
future, but
your
your self
and your
actualization
children.
ability. Yeah.
Yes, and yeah, your children, your person, everything is all tied into one. Like that person is robbing you broad day, and all you want is handout. So I'm sorry we have to go off tangent when we talk these things, but you
Right.
can't be a Liberian. You can't be a Liberian and don't talk about these things. Even if you're the best financial analyst or best expert in whatever, you have to talk about it, because when you see the country as it is, it's problematic. It shouldn't be that way. People should be waking up to these things. We're too old. We're about to be 200 years old in a few years.
Mm,
200 years of existence. And look at what the country is right now. And look at where, I mean, there's no upward trajectory. It's just bare minimum. There's no bold economic agenda to make
mhm.
the country a better place. Everybody come in and just scheming.
Yeah. We have a next Saturday. We want to do a two-part series on the budget, as we always do when it comes out. Officially, they
Again,
have released. They have released it. We want to go over it and just see. Sometimes like this student is a big failure. They didn't do well in middle school, so they get to college, they're not going to do well. But you have this hope that, hey, if that when they take the test, you just have this optimism that they're going to do, at least they're going to do well on this time, because but it's always been the case. But so for us, I think every time the budget comes out, we have that same optimism that there's going to be, you're going
but
to see some drastic change. So we're having that
no,
optimism to go look at it and see
no.
what was done there.
It's
So
you
we'll
can't
be
you
doing that
can't be
next Saturday.
you can be optimistic about the budget and the structure of the budget as it is, because that's the
Hmm.
same thing. They're just going to
Hmm.
plug in new numbers in the same thing. It's just going to be the same thing, more in
Hmm.
terms of employee salaries and all the other stuff that come. You're going to take about 50 to
Right.
60% of your budget for that, and the bottom 40% is going to go to whatever else, and then what's left for the entire public sector, development sector, what now
Hmm.
PSI is going to be something minuscule. And then meanwhile,
Hmm.
we leave that, then we're looking for people, we're looking for donors, right? We're looking to other countries to give up money. Meanwhile, the way the country get money, the way those countries get money is by making their citizens, um, making their citizens useful, right?
Yep.
Providing them education, training, making sure they have infrastructures, right? Giving them the opportunity, right? They have available credit to start a business and stuff like that.
Hmm.
That's how these people make money and pay taxes to the government. Then,
Hmm.
meanwhile, we have our own people in there just sitting down, wasting away,
Hmm.
basically, just sitting down, wasting. We ain't thinking about how to turn it into productive ends. But we go to the people then who have managed to do that, and it's like, bro, international partner, hold your hand just out. Meanwhile, you have a very young population, you
Hmm.
have resources, you have natural resources that you can tap into and everything else. But how do you turn that into productive ends? That's what have been eluding us for the last 170 what 8 years coming up, or 79 years coming up,
76
whatever the
years,
case might be.
77 years. Yeah.
Yeah,
Yeah.
we've been doing the same thing over and over and over and over, we're going to foreigners when we have something that we ourselves can harness. The problem is we like shortcut. We can
Mm.
I will tell you, let me put it this way. I was listening to a preacher. He said God can show you your destination. He can show you, yeah, and he can show you your destination. What he doesn't show you, he doesn't give you, it's the plane, how you get to your
How to get there?
destination. Because if God show you your destination, if He show you the plan to get to your destination, you look at all the obstacles in the way and say, "Nah, let's stay. I'll just stay right here and play our air." And that's
As
what has happened to Liberia. That is exactly what has happened to
yeah,
Liberia,
yeah, yeah, yeah,
right?
yeah, yeah,
We know what our potential could be. We know it,
yeah,
but our leaders and our the people in themselves. I don't just want to leader. Our leaders and the people themselves have looked at that destination and look at the path to that destination and
and
said,
they're just giving up.
it's too high. Let's do here to more. It's okay. Yeah, we just be here. And then we have done that for 100 and some more years, almost 200 years. That's how we've been. That's
Yeah,
basically what happened.
yeah. And let's wheel this back. I know it's time to wrap up. Let's wheel this back, and I know we talked about the SIB bank, you know, is having a liquidity problem. Um, and we talked about, we looked at the whole banking sector in general in terms of how we think some of the measures that the central bank should be looking at, you know, in terms
Mm-hmm.
of assessing banks, but also uh, you know, giving guidance in terms of how to regulate them. You know, one of the things we looked at was whether the the policy change to increase the reserve ratio was actually even necessary, during especially in an economic term where they should be loosening that to make it easier for banks to lend. Um, and you know, we look at a series of indiscrepancies that are a series of discrepancies that are within the measure that they put out, and we talked about some of those things. But I think fundamentally, the question boils down to, you know, well, the the outcome that I got from all of this, you know, through our discussion and going through the central bank annual report, is that uh, either the folks at the central bank are giving the wrong guidance to the banking sector in general, and those guidance are being taken and applied, and this is why it's leading to what are the increase in non-performing loan, or several banks now, some of them, I think I talked about, some I don't want to talk about, are having liquidity problem. So for us, what we talked, I think you, as I say, you brilliantly gave out some of the ideas that I think should be definitely implemented. And from what I was told, that I know Dennis always talks says is that, you know, some of those guys from there, they watch this show, they take ideas from it. So mine, my last question to you is maybe you already gave your you know, some of, you know, solution that you think they should be looking at. Maybe in that case, we should hear your closing argument in terms of on this particular topic. You know, what you
Well,
want them to take away either from this discussion, or if it, you know, one thing that you think they can do this year that will help them, you know, put a break on some of the banking issue that we're having. What do you think that would be?
where do you start? Where do you start in the system? Is it because again, this is a systemic problem, Gabby. It's
Hmm.
it's hard to just pinpoint one thing and say this is what you're
Hmm.
gonna do to stop the hemorrhaging, right?
What do you want the audience to walk away from? Maybe
Okay.
that'll be first. Okay. Yeah.
What I want the audience to walk away from here with is that the problem that you are having when you go to the bank, that your bank cannot give you all your money, that you have to stay in line, they have to ration your money to you. Like if you go for 500, they give you 250 or 100, whatever the case might be. That is just symptomatic, right, of the broader problem that we have as a country, and particularly as a banking and financial and economic system, right?
Hmm.
So what you want to walk away from, especially I'm just going to keep it at the banking and financial level, right?
Yeah. Yeah. Yeah.
That's the system. That problem that you are having is a direct result of the fact that your government have not done anything in terms of national identification. I'm not talking about giving you ID card. I'm talking about actual national identification,
Hmm.
where identifying where you live in terms of having or zip code system,
Oh.
identifying when you have assets,
Hmm.
identifying you as an individual. Your government have not done that, and they need to do that. When your government do those things, the bank will be able now to unleash itself, right? It will be able to go out there and give loans to people, or when you bring loan, matter of fact, that whole process can even create job. That's job creation in and of itself. You have
Mm-hmm.
people, more
Mm-hmm.
people working just by doing that, right?
Mm-hmm.
So more people working, more people will need banking services. So they will have people coming to the bank to deposit money, and the bank will have enough deposit to loan out to people out there to go make businesses, and then
Mm-hmm.
this cycle will just continue over and over. Meanwhile, at the heart of that, the central bank too will be able to effectively regulate banks, right? Will be able to stress test them, make sure that the employees are qualified, people are doing the right thing. A whole slew of things will be able to happen in the system. But it all starts with identification,
Mm-hmm.
and that's where it starts. That's the pipes, and that's the brick and mortar things you need to do. Identification, people needs to be identified, asset needs to be identified, businesses and whatnot, everything else needs to be identified. It comes down to that. That's the first building block, and then the banks would be able to use what is underpinning our national system now, to be able to build upon it and make sure we have a more vibrant financial system where the bank, because if you think about the bank, the money the bank is putting at risks or giving loan to somebody, that's somebody else's money, right?
Exactly.
That person is
Yep.
waiting for the money. They need that money also to go and do something else, but they put it in the bank to see, because the bank say they can make profit, it will give you interest on it. So the person is trying to make a little profit. They're not sophisticated investor, right? They're just trying to make a profit on the bank, or trying to find, or maybe the money too much. They won't keep it in the house under
They
the
don't want to save
mattress,
it.
right?
Yeah.
Yeah, you just want to put it somewhere where you know it will be safe, and that's the assurances that the banks give, right? So that person is waiting for the money, and so the bank, when the bank loans money out, they put in somebody else's money as risks. So that's why it's important for our government to make sure the bank is not just blindly taking risks. They know they are taking calculated risks based on the fact that the system is set up in a way that people are identified. We know who we're giving somebody else's money to. So just in case you don't pay, we have lien on your property, so we can recoup that person money to give back to them, so the loan does not end up as a bad debt, right? So that's what I want you to take away from here. The system as it is has a problem, but the problem
Mm-hmm.
begins with your government, and to the extent your government has not fixed that problem, it compounds to the bank. And that's why when you don't get all your money out, because the bank is illiquid, right? People, there's a lot of bad debt, but I mean, and they only have so much money to give, or few money to give out in a day, so they resort to rationing. And then the central bank is as exacerbating that by changing the reserve requirement from 20% to
To
25%.
25%. Yeah.
So meaning that the bank does not have enough money on hand to give you back or to make loans or whatever. So the bank is very tight on the banks. The bank does not have enough money to from your deposit to give back, because they have to put at least 20% or $25 back for every dollar, or 25 cents, right? So they
For
only
every
left,
dollar. Yeah.
for every dollar you have to
75 cents.
put 25
Right.
cents, and you only left with 75 cents, right? So
Mm-hmm.
there's just no more. So if, so let's suppose the bank had maybe 80 cents to get 80 cents on every dollar to give out. That way you're expanding the credit and the supply in the system. More people can get credit. You know what I mean? More good loans can be made, supposedly, hopefully, right? If the government did their part. Now that's all contingent upon government identification, right? So
Mm-hmm.
all those things come into play, right? And so take away from this, your government needs to identify people in the country, and then the bank will do what it's supposed to do afterwards.
Yeah. No, thank you. I think that was a great takeaway that I think everyone should, maybe walk away, because I know we talked a lot, and if you have time, take what rewatch what we talked about, and there's a lot that was said here. I think for me, the only thing I would like to add to that is the yes, we know that the government, as you said, it's you know lack inability to identify its citizens. So I don't know how you plan on protecting your fundamental goal should be protecting the security of your citizen. But if you can identify them, how you going to protect them? So I definitely agree with you on that. Let alone trying to collect, taxes from them. If you can
Taxes,
identify them,
issue, they get health
right,
care,
right.
all those
So
things.
for me, I think in addition to all of that, but I think I want to place the biggest blame on the maybe the central bank as well. I think their
Yeah.
inability to, not biggest, but equally so, equal blame on the central bank as well. I think their inability to really understand. And if you read through their annual report, you would think that they have a good grasp of what is happening globally. But to look at all of that, what they have written, and then you go back to their recommendation where they increase the reserve ratio um, to from 20% to 25%, it just means that everything you just spit out in that report, you are doing something contrary to that, right? You're talking about the downshift in the global economy in 2022, how that decreased
Yeah.
the growth rate. The growth rate decreased in 2023 from what it was in 2022, and meaning there is some level of fundamental uh, down, shift in the economy in Liberia. Is going to impact, even if it's not happening in Liberia. We're going to feel the downside effect to that. In your case, should be to taking the right policy to say, okay, this down should happen. A lot of small businesses are going to be impacted. We need to make sure that banks have enough capital on hand to be able to lend to some of the businesses, right? And they initial some of the things I think we talked about. If you read the report, they, in 2022, what they were issuing, I think $4 billion, what they were going to put back in the economy, right? But then to go to counter to that and do something, where you now tightening the bank's hand, I think it just tells us that, um, as I said earlier, they don't know what they're doing, and their lack of, either understanding of how financial market work, how financial system work, is impacting everyone else. It rolled down the hills to the bank, and it the customer like you, myself, the citizen also get the downshift effect as well. So I think that's one thing I want you guys to take away from this as well. That you know there is fundamental problem. Banks are to be blamed because they, like the leadership, but the central bank is equally responsible as much as the government, as Percy pointed out as well. So I think we can talk about these things and talk about them. Is the biggest solution to this will be having a government or a president comes in who understand these things fundamentally, not just run on policy and policy and policy. You can have the brilliant policy, you can come to us and say, God wrote this policy and hand it down to me for me to bring it to Liberia. If you don't understand some of the fundamental things we talk about, from the economic, the financial aspect of it, how important the financial sector is to getting you to where you want to go, you will become just like every other president who comes in and make all the excuses, and at the end go panhandles to um, the developing partners. So that's what I wanted to leave you. We want us to leave you with. Any other parting comment before we leave, Percy?
I just thought about something, right? So in
Yeah,
this
go ahead.
country, we have School of Economics, right? So basically, the
Hmm.
reason the American economy have developed over time more and more and more is because they have they have schools here that actually study the American economy and and stuff like that.
Yeah.
I mean, I don't know if we have something like that. I'm not
Nope.
talking about going to school, one college and doing econ course. I'm talking about an entire school dedicated to economics, actually studying the American economic system and how it's built and how to improve it and whatnot. Something along those lines, right? I don't know. I think we need something like that. I think there should be a whole
Hmm.
school for economics,
Hmm.
Liberian economics, right?
Yeah.
Like
Yeah.
how the country have developed, the historicity and
Hmm.
all those things, how we can all those things needs to be studied, well taught, and so we can bring more. I mean, we can advance those things, but we can put out, students, economic students that actually understands are in tune with the economic nature of their country, not just the broader environment, but the
Yeah.
idiosyncrasies of their country also. But that's my last thought. That's my parting thought, and that's it.
No, no, I agree. Thank you, and that's well, that's a good point. Again, thank you for taking your time, taking your Saturday to join us, especially on this short notice. This time next week, as I said, we're doing a budget. I'll give you a good enough heads up to, look at what we're going to do, and then hopefully you can come on as well, and let's talk about it. I know I think the last time we did a budget, I said that was going to be my last time talking about it. You get the
never,
each, right?
never say never. Never say
Never say
never.
never. You get the each. There is, sometimes you just get frustrated about some of the things that are in the budget. But hopefully, let's have a discussion and see if we can just add one or two cents to the discussion. So that will be
All
the
right.
topic for next week. We want to do a two-part. We'll do the first, and then we'll do the second on that as well. Yeah.
Okay.
So um, wherever you are, thank you for joining us, and hopefully you enjoy the rest of your weekend, and take care of your family and yourself. Bye.
We didn't get any comment, right?
No, we didn't. And the reason being, I when I look at the conversation, I understood it. If we're talking about politics, people have a, like this is their
Yeah,
area,
yeah, yeah,
but
yeah, yeah.
this is a little
Who is
deep,
it?
and we have
Obviously.
quite a bit of guests on here, so I don't know why they didn't. For me, I just think maybe this is not something that they're interested in. So they're interested, but in terms of
It will be there
to
for
be asking the
posterity.
right question, you have to have but I usually tell people I don't care whether you understand what we're talking about or not. These are, you know, for me, that's the reason why I think there's no comments. But you know, there's quite a bit of people that I was watching, so um, no comments. Yeah. Uh, but anyways,
Okay.
enjoy your Saturday and take care of
You too,
yourself and
Gabby.
take care of your family. Yeah. Ciao.
You too. Bye.
We all be right. Labira is our home. Labira people.